as it does grow and the institutions do adopt it and they put it in their portfolio as a separate asset class, they're going to start understanding that, wow, I don't want to hold 10, 20, 30-year treasuries or some of this corporate debt that's way out there, that's way riskier. I'd rather take some of my money and put it in Bitcoin and hedge against that inflation that's still occurring, because the inflation, in my opinion, is only going to continue and could likely get worse for a period of time.
So what's your 5-year price target on Bitcoin?
Well, so if we're in 2025 now, 2030, I'd say it's somewhere between $700 and $1 million per Bitcoin.
A digital asset that has risen as a potential solution to the inflationary challenges plaguing traditional financial systems. Although Bitcoin's market cap is around $2 trillion, only about 0.25% of the $900 trillion in global investable assets, it represents a burgeoning asset class with immense potential. He highlights Bitcoin's superiority as a store of value compared to gold, noting its unique properties: scarcity, portability, and decentralization. While gold has been the go-to asset for hedging against inflation for centuries, Lavish predicts Bitcoin will eventually surpass gold's market share, potentially doubling or tripling it within the next decade. Lavish predicts that by 2030, Bitcoin's price could range between $700,000 and $1 million per coin.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
You see the CPI number, these inflation numbers that the BLS reports and that the Fed points to, and they say it's about 2-3%. Don't believe it. Real inflation is the expansion of the money supply, and that's been somewhere between 6.9 and 7.1% since the Nixon shock, depending on how you look at it. But just call it 7%. So you need to be making, on average, more than 7% annually in order to keep up with inflation. So the last thing you want to do is take your money, put it in a checking account, and not get any interest on it, because JP Morgan Chase, Wells Fargo, and Bank of America are taking that interest from themselves and not passing on along to you. You need to keep up with the expansion of the money supply. That's just reality. Bitcoin is a long way to go. So even though we're talking about it, and even though it's an asset that's worth about $2 trillion now, it's only a tiny fraction. It's like 0.23 or 0.25% of total global investable assets around the world, and which are about 900 trillion. So how is it going to change? Well, what happens is, as people recognize Bitcoin as a separate investable asset class, institutions are understanding it. There's a massive amount of tailwinds behind it right now, which is exactly why we started the Bitcoin Opportunity Fund, because we see all the opportunity that's in there, in this ecosystem. Well, why is that? Well, right now it's the ultimate store of value, in our opinion, and it will grow to be the ultimate store of value in the world, in our opinion, and again, for the reasons I stated before. But the reality is, right now, it's a digital asset. It's not money yet. It may become money down in the future, but it's not generally accepted everywhere. It's a great store of value, but not a means of exchange yet. And so what I believe will happen is that the first thing it will do is it will take a lot of that market share from gold, and it will more than double or triple the size of gold in somewhere in the relatively near future. Not years, but certainly in the next decade or so. And the reason for that is that it has properties that are much stronger than gold and are much more advantageous to have as a store of value. So that's part of it. The second part is that as it does grow and the institutions do adopt it and they put it in their portfolio as a separate asset class, they're going to start understanding that, wow, I don't want to hold 10, 20, 30-year treasuries or some of this corporate debt that's way out there, that's way riskier, I'd rather take some of my money and put it in Bitcoin and hedge against that inflation that's still occurring, because the inflation, in my opinion, is only going to continue and could likely get worse for a period of time.
So what's your 5-year price target on Bitcoin?
Well, so if we're in 2025 now, 2030, I'd say it's somewhere between $700 and $1 million per Bitcoin.
So why are people
that's after going through the cycle and coming back down? The network itself is a lot stronger than he understands, right? So what I like to tell people who are newcomers is that Bitcoin's digital property. It's a superior form of digital gold, right? And it's shown it can no longer be ignored as a store of value, right? So we're seeing it happen in real time. So I focus on the trust. I've been talking about the trust. And so Bitcoin is a rapidly growing network, and it's operated continuously since 2013. It had one hiccup then, but since then it's processed over 1 billion transactions and maintained over 11 years of uninterrupted, 12 years of uninterrupted service. So, but why is that? It's because the network is secured by 175 terawatt hours of power. That all those computers that are securing the network, it's equivalent to 20 nuclear reactors running continuously. So, put simply, the Bitcoin network is a fortress digital of power. It's nation state level resistant, and it's growing stronger every day. So that's what he's got wrong, is people don't understand that network effect and the strength of the network. That's where it is. And once you do understand that, it clicks for you, then everything else falls into place.
Lavish emphasizes Bitcoin's transformative potential. Beyond its role as a store of value, Bitcoin represents a trustless system where transactions are verified without intermediaries. This innovation eliminates counterparty risk, a significant vulnerability in traditional financial systems, as evidenced by past crises in 1998 and 2008. Lavish notes that Bitcoin's immutability and decentralized nature make it a foundational technology that can revolutionize industries far beyond finance. From real estate to insurance, the applications of blockchain technology are vast and largely untapped.
We're seeing right now that with Bitcoin in particular, there's now this new way to store value, and it's becoming, effectively, it's taking market share away from gold. And I think it will do that. It'll continue to do that over the course of a number of years. But the reason for that is that it's trustless. And so what you have to know about cryptocurrencies and the different ones, there are some that will have utility. That's reality. There will be some utility there. And so what is revolutionary to me about it, especially with Bitcoin, is that trustless nature, where you have this immutable blockchain that cannot be altered, and that all the incentives are aligned. They're aligned in order to keep that in order to keep that chain unbroken. And so you can trust that without having to trust anybody else on the other side of the transaction. And that's really important. What we saw back in 1998 and back in 2008 is that counterparty risk was massive. And so just at the base level, not having to have counterparty risk on any, whether it's monetary, financial, whether it's insurance, whether it's deeds to houses, whatever it may be, that having a trusted blockchain is something that we've never had in pretty much the history of the world. We've always been on a ledger that we have to trust people to keep that ledger, and trust that that centralized ledger is correct. But not having that is a really big deal. It's going to transform industries in ways that we can't even imagine. There's so much misinformation out there about Bitcoin. When you talk to normal people, like you and I are in this world every day, and we look at it every day. We talk to people who understand it every day. But if you go out into the world and you ask somebody about Bitcoin, even people in my family, I've been talking about it for years, and I guess this is on me, but some people just still don't understand it. They think, oh yeah, I got some of that Bitcoin. I got the Ethereum one. And so they just don't really understand the differences. They truly don't understand. It's hard. It's hard to wrap your head around. There's going to be some deregulation. We do expect the Trump effect to take place, where there's kind of two sides to it. There's that deregulation that will allow smaller companies to be more profitable because of the red tape. We both know just how expensive and onerous it is for small companies to operate in this system. It's just what it is. So that could be helpful. He said drill, baby, drill a lot, which would actually be anti-inflationary because energy prices would come down if we had more oil. The harsh reality is, or the stark reality is that Trump loves the stock market. He points to it every single day of his administration, pretty much. He came out this morning, even with what's going on, he came out this morning with a headline saying that he literally said that rates are too high. So he's already putting pressure on the Fed, and he's not even in office yet to lower rates. But that's a lot to get our heads around. So let's go back up to like 100,000 feet. We've got a lot of things going on. We have had some inflationary numbers coming through, and I'll share a chart with you that came from Apollo that you can put up on the podcast once we're done taping. But it'll show and you've seen this chart before, Anthony. It's that chart that shows the 1970s inflation, how it spiked, it came back down, and then it spiked again. You and I lived through it, we're basically on the same exact trajectory as that. The difference is back in the 70s, that was a lot of that inflation was driven by that oil shock. The shock that we had out of the Middle East, that we had that embargo and the Iranian conflict, and we couldn't get gas in our cars. So that energy cost was so high. That's what really caused that inflation spike back then. It's much different now. The difference now is that we're running 130% debt to GDP deficits versus 30% back then, right? So, it's a huge difference, and we're seeing that the economy is fiscally driven. We're running $2 trillion deficits, and that is inflationary. So that's kind of like the way, way, way up high view of where we are, right? So then you look at it and you kind of drill down and you think, well, there's two economies going on. I know of people who are struggling right now. They're kind of middle-class people who are really struggling with their discretionary spending. They don't have discretionary income like they did before, where they could just go out and do things just for fun, entertainment. So much of their paycheck is being taken up by just rent, food and energy, gas and that kind of stuff, that and especially insurance has gone through the roof, both health and auto and home insurance. This stuff it's really weighing on that lower demographic, and you can see it because the debt numbers are going straight up, the personal debt numbers, and delinquencies are rising.
Despite its growing prominence, Bitcoin remains widely misunderstood. Lavish recounts how even within his own circle, misconceptions abound, such as confusing Bitcoin with other cryptocurrencies like Ethereum. He stresses the importance of education in helping people understand Bitcoin's unique properties and potential. Lavish also highlights the role of regulation in shaping the future of Bitcoin and other digital assets. While deregulation could spur innovation and reduce costs for smaller companies, regulatory clarity is essential to foster trust and broader adoption.